Hey everyone, welcome back to Corporate Decoder, the place where we dig through the boring business filings so you don't have to think of it as a financial colonoscopy. We're diving deep into the guts of the company to see what's good and what needs to be flushed away. Today we are looking at Jones Lang LaSalle or JLL's latest annual report, and trust me, it's got more twists than a pretzel, but we will get you all of the important stuff. JLF, you don't know, is a massive real estate and investment management company. They're talking billions in revenue and operate all over the globe. Now, the headline JLA had a pretty solid year. Revenue is up and profits are soaring, but there are also some potential storm clouds on the horizon that we need to discuss. Let's start with the good stuff. For the year ending in December, JLL pulled in over $23 billion in revenue. That's a 13% increase over the previous year. This growth was not just a fluke, it happened across most of their different business areas, now called segments. Their markets advisory segment, which includes leasing and property management, saw a nice jump. The capital markets segment, dealing with investment sales and debt advice, also had a really strong year. Even Work Dynamics, focused on managing workplaces, showed impressive gains. However, it wasn't all sunshine and rainbows. Their JLL Technologies segment actually took a bit of a dip. And LASALLE, their investment management arm, saw a slight decrease in revenue, so the company had mixed results there. Now, how did all this translate to profits? Well, JLL's operating income, which is like the profit from their core business, jumped by a whopping 51%. They're talking about their vision to enhance productivity, optimize sustainable and profitable long-term growth, and create value for everyone. That sounds great, but how did it happen? Net income, the bottom line, more than doubled. Earnings per share also jumped significantly. One thing to keep in mind with JLL is that their business can be a bit seasonal. They tend to make more money towards the end of the year as real estate deals close. Alright, let's talk about the risks that JLL sees. One big one is keeping up with the rapidly changing business world. They also worry about attracting and keeping talented employees. That is a challenge for many big companies right now. They are also worried about the growing reliance on third parties, which could expose the company to economic and reputational harm. Simply put, if their partners screw up, it makes JLL look bad. Of course, no business discussion would be complete without mentioning cybersecurity. JLL is concerned about cyber attacks, data breaches, and keeping client information safe, and how it could affect their business. They cite geopolitical issues and trade tensions as other potential problems, war, tariffs, things like that. Also, JLL has pointed out that keeping up with changing technologies like artificial intelligence is a risk, and you are seeing this with many old-school companies. The company also faces risks about complying with environmental regulations and delivering on its carbon emission goals. Let's talk about JLL's strategy to deal with these risks. Their focus seems to be on a few main things. First, serving clients by providing data-driven advice. This makes sense since companies will pay good money for good insight, making them more sticky. Second, emphasizing their brand as trustworthy and ethical. They want to be known as the good guys in real estate, always a good look. Third, focus on technology by investing in software and AI. And finally, sustainability seems to be a big point in the future. A quick peek at corporate governance. The company's audit and risk committee oversees cybersecurity. That's definitely something investors want to see. Also, JLL expects its vendors to act ethically and has a whistleblower policy for reporting bad behavior. Now on to my final thoughts. I think JLL is in a pretty good position. They're a big player in a consolidating market and have a good mix of services, but they need to watch out for those risks, and their investments into technology solutions should be the company's main focus. Looking at the hard numbers, the company's broad base of global operations should also help reduce volatility and should help ensure a continued growth over time. The fact that they have an investment-grade credit rating also makes them more credible and competitive. Finally, they received quite a few awards as one of the most trusted and ethical companies. Hopefully, this isn't just for show. So, what's my recommendation? I'm leaning slightly bullish on JLL with a target price range of $240, $260. A good stock, nothing amazing, but not one you should ignore. This is based on a combination of factors including their earnings growth and dividend. Now, before you run off and buy the stock, as always, do your own research. If you enjoyed this video, please like, subscribe, and hit that notification bell. Until next time.